beginning 2008, down to 700, 30% correction, and then it peaked at 1900, 2011. That could happen again. I fully expect that's the risk. The difference is if you look at gold versus Bitcoin, let's compare the two. Bitcoin trades about 3 times the volatility of gold. So if gold drops 30%, Bitcoin's dropping 60, 70, 80%. Now, hopefully that won't happen in the near term. The key point is you basically need some form of wealth destruction, I think. And that's happening in China. It's slow. It's been happening in some risk assets like Bitcoin, and it's been happening in the equity market. It's clearly happening in housing.
The decline in gold prices continues, driven by the US dollar's resilience amidst bearish market sentiment and steady job growth in the United States. The yellow metal is under pressure as the Federal Reserve is expected to maintain higher interest rates for an extended period. This has significantly boosted the appeal of the US dollar, given the expectation that the U.S. economy will avoid a recession thanks to easing inflation and a stable job market. Wage growth slowed in August, possibly because employees are holding on to their current jobs due to waning confidence in the job market. Investors are now focusing on the release of the ISM Services PMI for August, which is anticipated to remain relatively stable at 52.6. Demand for services remains robust. Amidst these indicators, gold enthusiast Mike McGlone remains optimistic about gold, asserting that it still has the potential to be the best-performing asset. He also suggests that Bitcoin is a long way from becoming digital gold or anything similar.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
It's still one of my base cases. One of the best performing assets in the near term couple years is gold. The price you see on the screen in terms of dollars is 1933. I say 1933 because some of us remember that as the significant year ever for gold and assets. That's when basically President Franklin Delano Roosevelt devalued the dollar versus gold, and it bottomed deflation and depression. It bottomed the stock market in terms of dollars, and it ended deflation. Why? Because we just devalued versus gold. But here, that price right now is the average price for the year, and that's the highest average price ever. So I look at that as, okay, that might fit into that mantra, I love, and if it goes up, it's going to keep going up. Well, gold is appreciating, and the bottom line is how you measure it versus fiat currencies. And if you measure the dollar versus a basket of fiat currencies, the dollar basically goes up over time. Why? There's nothing better. If you measure gold in terms of any currency, it almost always goes up over time because they're fiat currencies, in particular the dollar. And that's where Bitcoin fits in. Bitcoin's just a much more digital version. So the thing that we mentioned earlier, we want to talk about a little bit, is I've been writing about China a lot, and that is, I view China as so there you see that chart. That's a triple top. And the lessons I learned in the trading pits is triple tops are made to be broken. And there's so many cool different ways to look at it, but it's just also, okay, those are technicals. Technicals can really rip you apart sometimes. It's the fundamental foundation behind it. It's very simple. That's gold measured in dollars. We all know at home happens over time. That's part of the reason for Bitcoin is there's an unlimited supply of dollars and there's a very limited supply of gold. Next question. So just the question when, how, and the key thing is the major competition for gold right now is 5.4% in T-bills. It's we haven't seen that in 20 years. And the stock market's still going up. That's going to flip. Just a question of time. And that's when gold takes off. That's my view. But I like to tip that over to the macro. Now, that's gold. If we want to tip a little bit into what we talked earlier about China, I'm good with that. But that's the basics for gold. It's also the basis for Bitcoin. The problem is, and I'll end with this, is Bitcoin has just gone up so far, so much, and the basis for it going up has reversed. And that is very low interest rates. So the average interest rate for the last 10 years for most of Bitcoin's existence from 2011 to 2021 was 0.5% in US. And a lot of rest of the world, it was negative. Now, if I just look at this November Fed funds future, it's going to go up to 5.44%. Those are major headwinds.
The US dollar index reached a 9-to-1 high on Tuesday, propelled by elevated treasury yields and cautious market sentiment. Market sentiment was influenced by economic data from China and the Eurozone. Gold broke out of its consolidation phase, experiencing a decline from nearly $1,940 to $1,925, and the prevailing bias continues to favor the downside due to the pressure from higher yields in the US dollar. Silver recorded its 5th consecutive day of losses, but found support just above the 20-day moving average at $23.50. Mike McGlone, in his gold analysis, maintains his perspective on the precious metal. Additionally, he explained his lack of bullish sentiment towards Bitcoin, citing concerns about its significant liquidity dependency on China. Now, let's proceed with the video.
The liquidity is still being taken away from the Fed. So now we get through this August period. We're going to September. We all know that the average price of Bitcoin in September since 2011 is down 6.5% in September. Now, of course, that includes some months that are down 26%. So if you exclude, I think it was, I can check on my map and check that out. But it's that headwind that's overwhelming. That's what I have to keep emphasizing is unless we get this liquidity pump turned back on, which just give you the two last significant bottoms in the stock market happened about a year and a half, almost 2 years after the Federal Reserve started easing. That was in 2009. They started easing in 2007, and then 2002 they started easing in 2001. Bitcoin is the leading indicator in that space, and gold is the old guard technology that has been the store of value over time. So I always, when I measure like different commodities, some commodity people get upset with me when I point out, well, I'm glad you like this index and that index and energy and agriculture, but historically over time, they always underperform versus gold. And this is what's happening now, I think, as we get towards this inflection point, that we're going to see this leading indicator Bitcoin. It's basically fitting into my narrative for one of the biggest economic resets of our lifetimes, the last few months. If it continues this path, which I expect it will, to show that relative weakness, everything follows it lower. Now, if it can sustain above 30,000 and show some divergent strength versus a stock market that's not doing so well, maybe I'll change my tone. But it's still that mode that I'm concerned about is after we've had all this ETF stuff, and I just want to kind of end with this. This ETF stuff is things that we predicted 5 years ago. It's just getting there. I love when my colleagues dig into the weeds of this, James Seifert, Eric Balchunas, but we discussed when we launched the Bloomberg Galaxy Crypto Index in 2018, the primary goal is to be tracked by ETFs. It's still not happening. We're just getting there with baby steps. And now we've found that in the last few months, it might be happening sooner rather than later. But the thing is, you have to understand is, I think, point out is this thing called Bitcoin has been underperforming on a risk-adjusted basis for almost a couple years now. To get that traditional money to go from equities to Bitcoin, to go from anything, it's got to at least show some signs of value at risk outperformance, and it's not. I'm just pointing out the facts of money management. What's happening now, once it gets in the mainstream, that arbitrage kicks in, and the main arb right now, the big macro trade is this GBTC versus shorting anything you can. It's been working out great this year. I fully expect that to continue. But what it does is it squashes the volatility. We have to point that out as people getting in it now, expecting the returns you saw in the past, is completely irrational from an asset now that can be arbed out, and it's still a lot more room for arbitrage here. Like once you get rid of that discount in GBTC and all the futures, it's just a matter of time. And the point I like to point out is this volatility that is 2 to 3x gold in the stock market should drop to 1, and actually should get towards that of gold if we expect this to do what it's supposed to do, digital form of gold. And those 2, 3, 4x years are gone. They're over. Partly because people are so involved now. It's just the way these assets work. And I remember pointing this out to an ETF provider who deliberately did not try to launch a futures ETF because he said the futures are too wide. I'm like, that's what ETF does. It squashes everything down. And those days of that outperformance are just gone. It's just, unless you expect the more participants not to make this asset more stable and in the mainstream. That's my point. Bitcoin's a maturing adult now, and what you saw it doing on the football field when it was a kid is over. Now it's got to play adult, and it's becoming rapidly doing that. Here's the key thing I'll end with. Bitcoin volatility, we all point out, it's dropped this year, but actually versus the stock market and gold, it's up. Why? Because volatility, everything's collapsed, which shows complacency.
The Bitcoin price plummeted after a summer rally, while concerns about potential market turbulence in China weighed on major cryptocurrencies like Ethereum and XRP. Former SEC Chair Jay Clayton believes that approval of a spot Bitcoin ETF is inevitable, as Bitcoin is in high demand among both retail and institutional investors. The SEC delayed decisions on several ETF applications, but expectations for spot Bitcoin ETFs grew following Grayscale's legal victory. Bloomberg intelligence analysts raised the odds of approval by the end of 2023 from 65% to 75% after the court ruling. Feel free to share your thoughts on Mike's views on gold and Bitcoin in the comments. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.